Ever hear of the market wizards? Traders so consistent, they seem almost magical. But let me tell you something, it's not magic. It's hard work, discipline, and a process that anyone can replicate with the right mindset. Today, I'm going to share with you that you can build consistency in your own trading and take steps toward becoming your own version of a market wizard. We're going to talk about establishing consistency in your Forex trading. Now, in the Market Wizards, Jack Schwager interviews traders who make consistency look easy, but every single one of them will tell you it's not luck or magic. It's about building systems, showing up every day, and managing your mindset. And today I'm going to show you how to start your own path to consistent and disciplined trading. Now, Bruce Kovner, one of Schrader's market wizards, didn't become consistent by trading randomly. He followed a disciplined routine every day. For you, this means setting aside the same time to trade using tools like My Market Heat Map to prepare and reviewing your trades at the end of each session. Routine creates consistency. To better able to follow a routine, make sure that trading fits around your life rather than your life trying to fit around your trading. Going all in and sacrificing spouse and kids and jobs and personal health and friendships may work in the short run, but being rich and alone is no way to really live. Achieving consistency in the Forex trade requires structured routines. You want to have disciplined strategies for long-term success. So you want to have a routine, the strategy, and then be able to reflect on what you've done. Now, developing a routine, we're going to talk about that. Now, in 2020, there's the introduction of advanced trading that revolutionized Forex, right? You had analytical tools. Then 2021, you had the emergence of algorithmic trading strategies, increased with markets consistency and AI. And then 2022, the focus on psychological resilience became a crucial part of consistent trading success, okay? So you want to have your market overview, start your day off with a comprehensive analysis of the market. Take the pulse of the market. You're the doctor, and you're going to diagnose the market. Make that a regular habit. Don't take shortcuts. Don't I'm not going to do this part. I'm going to do this part. Because the moment you break routine, that usually leads to your most catastrophic losses. Strategic planning. You want to execute trades based on informed strategies and market conditions. You want to know your entries and exits. You want to know your exits before you even enter and know how much you're going to lose as well as how much you're going to win as well. And then trade evaluation. After the trade, you want to decompress and go over your trades, see what you did wrong, see what you did right, and how you can improve. Evaluation is a very key part. Now, as far as action steps, you have the problem, which is inconsistent trading results that hinder growth and profitability for traders seeking success. And the solution is easy. Implement a repeatable trading routine based on proven habits of successful traders. You want to turn this into a turnkey approach, and that's why we have my system Pip and Run. It's the same approach that I've been using for over 20 years in the market that has a 90% win rate. And it becomes boring. Making money becomes boring because we're doing the same things over and over again because the market has cycles and we just tie into those cycles and just repeat. And the results, we achieve a structured path to trading success with reduced randomness and increased profits, things that you can count on, certainty, right? So if you want to find out more about that, click the link in the description and book a free profit acceleration call. And that way you can find out if Pip and Run is for you. And I could be your mentor and I can help you along your trading path. I'd love to help you. Okay. So let's go about mastering the trading strategies, which is very important. Okay, Michael Kovner and other market wizards, they didn't jump from shiny object to shiny object. They stayed with one system and they traded it and they perfected it and then they improved on it. Paul Tudor Jones did become a market wizard by just trying 20 different strategies at once. He mastered one, He executed it flawlessly. So pick one strategy that works for you, whether it's trend following, support and resistance, or my pip and run system, and just stick with it, right? Don't jump from one shiny idea to the next. Mastery equals consistency. So here's an example of a simple trend following strategy. See the pullbacks? Those are your opportunities. What makes this work isn't complexity, it's repetition. Master the basics and you'll be miles ahead of traders who just overcomplicate everything, right? Effective journaling for traders. Being able to write it down, whether you use an electronic, like an iPad or your computer, or old school pen and paper, writing down and keeping track of your trades using a spreadsheet. And in fact, there's gonna be a free gift at the end. If you stay to the end, there's a link in the description where you can get a free trade tracking sheet. So every market wizard tracked their trades. They didn't just wing it. They wrote it down, what worked, what didn't work, and how they could improve. For you, this means logging your trades, the pair, the entry, the exit, the profit, the loss, and even your emotions. Your journal will become your personal guide to trading consistency, and it'll be that magic book that will give you the inspiration, will uplift you when you're down on yourself because you can see some winning trades. But you can also learn to love your losers. You can learn so much. Sometimes when we lose money, it's like losing a friend. It's like losing a dog or a girlfriend or a husband or wife. It's like losing money can be a very traumatic experience. And sometimes we want to shut it out. We want to block it out. We don't want to think about it anymore. So no, Greg, I don't want to talk about it anymore. But I said, when you look at what you did, remember, he who does not learn from history will be doomed to repeat it. So it's very important to face your loss, look at it, see where you went wrong, evaluate and say, oh, this is what I did wrong, and this is what I could do better. Because there's different types of losses, guys. There's loss because you just did a boneheaded mistake, right? There's boneheaded losses, right? There are losses in which you actually follow the plan, followed everything, but then the market just did something random, right? You may have had your stop too tight or something like that. So your prediction of where price would go, your entries, everything, you follow the rules, but you still lost. And that is a good loss, okay? Now, there's also bad wins and good wins. You broke all your rules and you made money. And you say, hey, I made money. It really doesn't matter. I made money. But if you keep going on that path, there's a factor in trading evaluation, a KPI called the risk of ruin. Okay. And so you start taking these crazy risks and these drawdown things and breaking your rules. Eventually, they'll come back and bite you. You develop bad habits. And because you got away with it one time, doesn't mean you're going to get away with it again. Okay. So not every win is a good win, and not every loss is a bad loss, right? Sometimes we lose because, hey, we went in the wrong direction and we didn't follow the plan, right? We broke our plan. So you want to be able to, you're never going to know this because in your brain, all you see is I lost, I see a minus sign, I lost money. I see a positive sign, I won money. But you won't know what these are unless you journal them and actually break down what these positive and negatives are. Were they good losses? Were they bad losses? Were they good wins or were they wins in which you broke your rules? And you won't know that unless you do some detailed journaling and reflection. Okay? So enough of that. Let's go on the next thing. We talk about journaling like a pro. But you also want to, here's what you should include in your journal. The currency pair, the entry and exit prices, the pips gained, pips lost, your profit or loss in dollars, notes on why you entered and how you felt. Your journal isn't just for data, it's for reflection and growth. So that's what you want to do. You want to be able to use that as a mirror. It's going to be like a mirror reflecting on you, right? So to sum it up, build a routine to create structure, master one strategy and execute relentlessly, Track your progress so you can learn and improve. And these are the same principles that made the market wizards consistent. And if they can do it, so can you. My students in ETU, if you need help, we have the accountability group within our whole mentorship program, because my students have learned that DIY doesn't really work. You're on your own, you're on an island. But when you have an accountability group and when you have a mentor that's had 30 years in the market, it makes trading and learning how to trade a lot easier. So remember, consistency equals systems, discipline, and mindset, and it's not magic. Build a routine to create structure, master one strategy and execute it relentlessly, and reflect on emotions and decisions. Okay? And just wanted to thank you so much for watching this. Make sure you like and subscribe and share this with someone that may need my help. And remember, go click the link in the bottom of the description for that free tracking sheet. I look forward to talking to you and seeing you on the next video. Cheers. Bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!